Hello, everyone, and welcome to this YouTube channel. If you're new to this YouTube channel, please like this video, share, and subscribe. It's another day, another dollar to make. By the way, happy new week, happy Monday to everyone. So, for this video, I'm going to be doing a precession analysis on EURUSD, and I'm going to start from the monthly time frame. So, on the monthly time frame, my swing structure is bearish. That is my swing structure. And internal is bullish. That's my internal, which is bullish. And fractal order flow is bullish. That is the fractal order flow. So currently, this is the current low that is holding price currently. So the objective of this internal structure and this order flow to be bullish was for price to pull back to facilitate the swing pullback, which we can see price has pulled back, mitigated the extreme swing supply. So the objective of longs has already been met. So now the expectation is for this supply, this strong high to hold, this supply to hold, and for price to target the swing low. So meaning now we could see fractal shift bearish and we could see also internal shift bearish. So first of all, to confirm that this supply is holding, I'd love to see this fractal order flow to shift, but I'm expecting it to fail. I'm not expecting it to hold, to keep, because the objective was for this bullish order flow was for price to mitigate this. That was all. So now I shouldn't be expecting to keep looking for longs. No. So for now, I'm expecting this fractal order flow to shift so that we can get, for price can form the next swing leg. And this is how price is formed. Price is formed by impulse, move, correction, impulse, of which we can see impulse, correction, and then maybe the next leg is impulse. And also another thing to add is this low is holding price, so meaning this can be a pullback. Also, once we get that order flow shift, it can be a pullback to this low. But since we know and we understand that the objective, this internal structure was only bullish to facilitate the swing pullback, meaning this lower, even once price mitigates this demand, this low, I won't be expecting it to hold. I'll be expecting it to fail. But from this demand, we can get some bullish reaction, of which on the lower time frames, this is the monthly time frame. It can be a huge move, which on the lower time frames can be a huge. You can catch some decent pips on the lower time frames, but expectation is for it to fail. So for currently, I'm expecting this low to fail. So meaning, even we can see from this huge weak reaction from the supply. So meaning we can, even if we see from the lower time frames, if we see clear order flow form here, we can still keep following it, targeting this low. Meaning longs aren't high probability now. We can catch longs maybe from the reaction from this demand, but you have to understand that price is coming from mitigation of this supply and expectation that this is the move that is about to happen. Meaning the next candle, we could see the next candles which they're going to form, which are bearish for price to target this low. So that's all for the monthly time frame. Let's drop down to the weekly time frame. So on the weekly time frame, my swing structure is bullish. This is my swing structure. Well, this is my strong swing low. That is the bullish break of structure that confirmed the bullish swing. After the swing break of structure, price mitigated there. We can see the mitigation of the monthly supply, and also we can see the huge reaction this week. From this week, we can see the reaction that happened after the mitigation of the supply. So meaning there's a lot of sell bearish momentum, which we can keep following it. So we can anticipate the reversal of this swing structure. So price could form potentially the next swing leg, or it could just be a pullback to this monthly internal demand. And if it shifts bullish, it can be a signal that price could target the high. But expectation is for it to remain bearish to target the monthly swing low. So we can expect also this swing to shift. So we can also expect this demands to fail. But we can see from last week the way the last week's candle closed, it closed with a huge with some weak indicating bullish reaction from this. But it could be just a small reaction and then press to target the low. I'm not weighing much importance with the bullish reaction. Meaning if you catch longs right now, you have to accept the risk of that it could be just a small reaction and the momentum to kick in for price to form to target the monthly fractal low, so we can price can form the next monthly swing leg. And also another thing is the way these lows were formed. You can see there the liquidity below these lows, meaning price could target that liquidity on the way down. But also we could see some decent reaction from here to supply, and potentially, and once it mitigates supply, maybe then supply will kick in again, and then we get the reaction for price to target this sell side liquidity below them here, these lows. So price has mitigated this demand range. That's where that's why we're seeing this reaction from. Even the way the weekly candle has opened with the continuation of the reaction from this week. This week, you see this week, the way it reacted from demand last week, and the price, the moment it opened, it is continuing with that momentum. But you have to accept, if you look for longs, you have to accept that we could see that momentum kick in from the monthly time frame. I use the higher time frames for direction. Yeah. So the daily time frame, let's drop down to the daily time frame. So on the daily time frame, let me push this to the side. So give me a minute there. So on the monthly time frame, my swing structure is bullish. This is my swing structure. This is my strong swing low, and this is my weak swing high. I've mapped it as my swing high because we've had a significant pullback. We can see price has pulled back to the EQ of the range. It has mitigated the monthly, the weekly demand and also the monthly demand, and we can see the reaction. Even the way today's candle has opened with some reaction, but this could be a reaction for price to maybe to grab liquidity above this high, and then the bearish order flow to continue for price to target. Even from the daily time frame, we can see the liquidity, this liquidity that is resting below these lows. Price could target this liquidity. But still, this is a strong low. We can expect it to hold, but we have to remember from the higher time frames, we can expect this low to be broken. We can expect daily reversal for price to target them. So once we see reaction right now, we can know that it's just a reaction for price to mitigate supply and then order flow to continue. And you see, if price reacts from this demand and then it mitigates supply, it could be either the reaction could either be a reaction move to form the next internal pullback, and then price to come and target the low. And you see, if price forms this and it takes some days so that we can get enough price development, then on the weekly time frame it will be formation of a failed reaction, because once price we get that reaction and price comes and breaks and closes below this low, and ideally also on the weekly time frame it will be a failed reaction, meaning we'll have a failed reaction from the weekly demand, and that could mean that demand has failed now and price could now target the sell side liquidity. But still, as I said last week, market structure is the king. If this is a strong low, then we can expect it to hold, and it can. Now price could now form the next swing leg, and price could potentially target the weak swing high. So for today, here, I'm interested with looking for longs to try the reaction from this demand to supply, Then once price mitigates supply, then I'll start looking for shorts. But also after price sweeps this high, and we see from the lower time frames like bearish order flow, then I'll be interested in looking for shorts, because for the monthly time frame supports that. But the main risk is trading against them this weekly demand, and also the monthly demand. It will be best if we see this demand fail. So if this demand fails, it will be really high probability to look for shorts targeting these lows. So that's all for the daily time frame. Let's drop down to the 4-hour time frame. So on the 4-hour time frame, my swing structure is bullish. This is my strong swing low, and this is my weak swing high. That is the break of structure that confirms the bullish break of structure. And another thing, this is my internal structure. That is this internal break of structure. This is my strong swing internal high, and this is my weak internal low. So last week, price, we got a pullback, a significant internal pullback. Price did not mitigate anything, but it was a significant pullback. And after that, price started to form this bearish order flow, which was respected until price took out swept the weak internal low. And after that, we got that reaction. Maybe this was the strong liquidation that was required for price to mitigate after mitigation of the weekly demand, so that we will now see that bullish reaction, of which we can see after the sweep of the liquidity, this equal lows, PBL failed, and we also got a bullish change of character. So this high is a weak high because it failed to cause the internal break of structure. So currently, looks like price is going to target it. So we can look for longs targeting that high, ideally to this 4-hour supply. So once price mitigates this 4-hour supply, we can look for shorts from it. But you have to understand from the higher time frames, we can see that price has mitigated demand, and that demand could be a reaction to for either price to mitigate the monthly supply or the daily supply. You'll get the idea, or the weekly supply. So if you trade from this, you could be trading from the higher time frame reaction. But it also supports, if you trade from here, you remember from the monthly time frame, the best move right now to catch is this move, anticipating the reversal, the monthly fractal reversal. This is the monthly fractal low. So if this monthly supply is going to hold, then we can see this low could be targeted, and the objective of the order flow, the monthly order flow, was for price to mitigate the monthly supply. Now that objective has been met, there's no need of keep following the bullish order flow. Although we are still price is still sitting on demand, meaning, sorry about that. Meaning price is now forming the move that could target this low. So this impulsive move, is what I'd really want to catch. But the mitigation of the demand is what is hindering it. Is what that is making me to be hesitant with looking for shorts. But if price mitigates this supply or this supply, then we get from this supply, I'll wait for order flow shift. If we get an 4H order flow shift, then I'll look for shorts targeting the weak swing low, internal low, sorry. But if price mitigates this supply above here, and then we see from the M15 order flows start to form, supporting this supply, then I'll keep looking for shorts. I'll look for shorts. So for today, we can look for longs, or if you want to be more conservative, if you don't want to be aggressive to trade against the high time frame momentum, then you can wait for mitigations of these zones to look for shorts. Or you can also wait for, or you can wait for sweep of this high, followed by bearish order flow shift, signaling the end of the internal pullback. Then you can look for shorts. Yeah. But if you want to be aggressive, but then currently longs are aggressive. So long, you can keep following the order flow to target this high to play the deep internal pullback. Longs currently are to play the internal pullback, and potentially, still this is a strong swing low, meaning price could still form the next swing leg. So if you look for longs right now, but after the sweep of this low, it has happened even in the discount of the swing range. The sweep of this low could be enough to form the next 4-hour swing leg. So meaning we could see price could now start to form order flow, which could be respected until price we see internal shift bullish. And also, the impulsive leg is formed through impulsive leg. So we can expect not to get deep internal pullback. So after the internal shifts bullish, so this order flow could still remain bullish until price takes out the swing high. Forex is all about trading, is all about possibilities. That's why I'm showing all the scenarios that could happen, so that when they happen, you don't get surprised. So you at least you'll be ahead. So that's all for the 4 time frame. So you can keep looking for longs targeting this buy side liquidity, and also for price to mitigate the supply zones and mitigate the supply zones. So let's drop down to the M15 time frame. So on the M15 time frame, by the way, as I was doing my precession analysis, we hadn't gotten an internal breakout structure, but now we can see we've gotten an internal breakout structure. So let me mark it internal breakout structure. So this is currently my strong internal low. Whoa, but the price has targeted the high. Yeah, it has targeted right now. The liquidity has been taken, the buy side liquidity. That is the high that was being targeted on the 4 time frame. But it's still valid if you leave this as your strong swing low, as your swing breakout structure, meaning this will be a strong swing low, and you'll be viewing this as you can either view this as your internal structure, or you can view this as your internal structure. You see, we are all still looking for the same thing. But there's a lot of momentum that has kicked in the market, probably for price to target this liquidity. You see, we are all still looking for the same thing. As long as you understand how to read price, that's all that matters. And as I said, whatever I'm doing, it's something that I've tested. It's not something that I've just woken up and started doing. It's something that I've tested, and I know it works. Okay, so let me proceed with the precession analysis. So on the M15 time frame, my swing structure is bullish. This is my swing structure, and within the swing structure, there's this internal structure. So internal is also bullish. So after the swing break of structure, a deep swing pullback is expected. Price has mitigated 4-hour supply. It could help facilitate the swing pullback. But then let me check something on the 4 time frame before we continue. I want to check the current fractal low. It's this one. So let's check on the M15. So my swing structure is bullish. Internal is bullish. We're expecting that swing pullback. Price has mitigated supply. So what I would want to see now to look for shorts is if we get internal shifts bearish. Ideally, we also get the 4-hour bearish order flow shift. Then I can look for shorts. For longs, I'd want to see. Sorry about that. I'd want to see this 4-hour supply fail. Longs currently at phase A2. So if this 4-hour supply fails, ideally you see it's fail, and then price pulls back. We get an order flow shift. Then I'll look for longs from the demand that will have formed, or you can look for longs directly from these old zones, or you can wait for a new range to be formed. Then you look for longs from the demand zones that will have formed, or you can wait for price to pull back to the strong swing low, then you wait for order flow shift, then you look for longs targeting the swing high. So that's all for today's video. Please like, share, and subscribe.